Welcome to the Thursday edition of the Tech Stocks Daily Podcast, where we've lined up a captivating ride through today's tech highlights. First, we're diving into Electronic Arts, rocked by a 17% stock plunge amid underwhelming earnings and potential legal drama, a plot twist worthy of any gaming saga. Next, it's Apple under the spotlight, with analysts weighing its lucrative service strategy, despite innovation jabs from critics. We'll also explore CACI International's bold defenses amid governmental changes and buoyant financials. Lastly, Google's ambition shines, partnering with HTC and Samsung to revolutionize AR, kicking competition into high gear. So buckle up, because it's another wild day in the tech stock world, and we've got all the details you need to stay ahead. Today, let's dive into the whirling world of Electronic Arts, a powerhouse in the video game industry that's been causing quite a stir on Wall Street. Electronic Arts, or EA for short, took a sizable hit as its shares plummeted more than 17%. The slide comes on the back of the company's recent announcement revealing underwhelming preliminary results for its fiscal Q3 2025 earnings. Not exactly the news investors want, as they're sipping their morning coffee. So, what led to this digital carnage more bitter than losing your leading player to a red card in the FIFA finals? Well, expectations played referee here, and they blew the whistle hard. Investors were hoping for EA's earnings to hit at least $1.15 per share, but EA's pre-announcement served up an appetizer of disappointment, with estimated earnings of around $1.11. While this might seem like a narrow miss, on Wall Street, even a slight deviation can send stocks sprinting in the wrong direction faster than an out-of-control Pac-Man. Adding fuel to the pixelated fire, EA flipped its previously cheerful forecast for live services net bookings from mid-single-digit growth to a decline. Talk about a plot twist. This was largely due to a crucial slowdown in one of its flagship franchises, global football. Brexit may have been messy, but losing the FIFA license is proving to hit EA right where it hurts, in the soccer boots. The popular Dragon Age series also dropped the ball, engaging a mere 1.5 million players when almost double that were expected. In reaction to the news, market analysts were quick to whip out their scalpel and cut EA's stock price forecasts. Meanwhile, trading volumes channeled their inner TikTok influencer and skyrocketed. Now seasoned investors and daring day traders alike are eyeing EA with a mix of skepticism and opportunistic enthusiasm. But even amidst this digital storm, there may be a silver lining. According to Doc's delightful duo of redirections, EA's earning expectations are still beating one prediction, that of Yahoo Finance, which expected only $0.06. So it appears EA got a tiny life's WinRAR anyway. As if a stock freefall wasn't enough drama for one day, EA also found itself in the crosshairs of legal eagles over at Block & Leviton. They have launched an investigation for potential securities law violations, setting the stage for possible litigation should any investor think EA's transparency turned to opacity Deltarune style. If you've ever pushed innocent B button and still found yourself splashed across the quicksand of securities fraud, you know the feeling. While EA fans are hoping for a massive comeback with shiny future releases, including the eagerly anticipated new editions of favorites like Madden and The Sims, right now, the game might be paused. Both big-name investors and casual followers will be keenly watching the company's next moves as it tackles these business challenges more finely than any boss fight level on Call of Duty. So grab your virtual popcorn, because EA's stock storyline promises many more chapters to come. Well, folks, it's another day, another deep dive into Apple, everyone's favorite trillion-dollar tech giant that keeps popping up in our headlines like a celebrity with a never-ending supply of juicy gossip. Today, Apple was the talk of the town for a trio of reasons, spanning their market performance, innovation strategy, and their role in making folks richer than ever before. Kicking things off, we've got some juicy financial insights. Apple was put under the microscope today as analysts took the time to do a deep analysis of its performance compared to its competitors in the technology, hardware, storage, and peripherals industry. The findings were pretty eye-opening. While Apple's price-to-earnings ratio is slightly more valuable in investors' eyes, its price-to-book and price-to-sales ratios suggest that it's a bit on the pricey side in certain areas compared to its counterparts. However, Apple flexes its financial muscles with powerful metrics, boasting a return on equity and EBITDA that far outperform the industry average. For those of you who aren't number nerds, this essentially means Apple knows how to squeeze every dollar into an impressive profit, despite a slowdown in sales growth compared to its peers. In our second slice of apple pie, Mark Zuckerberg decided to channel a bit of Simon Cowell, openly critiquing Apple's innovation, or supposed lack of it. Apparently, old Zuck isn't tickled by Apple's recent approach, which he describes as an exercise in minor tweaks rather than groundbreaking innovations. However, it turns out that this might not be such a catastrophe for Apple as many might think. The tech titan's strength lies in its enormous loyal customer base, and not necessarily in doling out jaw-dropping, game-changing tech doodads every year. Instead, Apple is cunningly leaning into their flourishing services arm, raking in a whopping $96 billion in services revenue recently. Yes, trying to upsell on services like AI integration is just what the doctor ordered for their long-term growth, even though you won't be seeing a sudden influx of mind-blowing new hardware. And finally, could Apple still help you live the luxury lifestyle of a tech stock millionaire? Judging by past performance, absolutely. In today's bullish market, history tells us that a solid chunk of Apple shares could have turned a pretty penny, exponentially that is. Apple's unsurpassed brand loyalty and a well-cultivated ecosystem of super hit products and services continue to make it a desirable addition to any diversified investment portfolio. That said, it's essential to note that betting on sheer stock magic from Apple won't light your millionaire cigars alone. A mix of other quality stocks should also find a home in your trading account to increase those pot of gold vibes. So, there you have it. Apple is straddling the worlds of financial might, strategic innovation, or should I say, controlled innovation, and the potential to be a golden ticket in your investment candy bar. Stay tuned because as we know, where there's Apple news, there's bound to be more excitement brewing just around the corner. Ladies and gentlemen, gather round because today we're diving deep into the tech trenches with a focus on CACI International, a key player in the defense IT sector, which was making quite the noise on the stock charts. If you thought defense tech was all about top-secret projects and inscrutable contracts, think again. There's drama, there's intrigue, and today, there's plenty to get our tech-loving hearts excited. First off, CACI International took a bit of a tumble, with its stock sliding by as much as 10% early in the trading hours. The culprit? A mix of investor anxiety linked to political shifts and a post-earnings presentation that seemed more thriller than dull financial talk. Why the worry, you ask? The buzz centers around the US government's new waste-cutting initiative led by Donald Trump, cleverly named the Department of Government Efficiency, aka DOGE. Investors are scratching their heads, trying to figure out whether this streamlining approach will lead to a waterfall of new contracts or a drought. CACI's strong quarterly financial report got overshadowed by lingering doubts about a shift from cost-plus contracts, those beauties that reimburse costs and guarantee profits, to riskier fixed-price deals, where unexpected cost overruns are borne by the contractor. Now, let's sprinkle in some good news pepper, shall we? CACI International not only exceeded expectations for their second quarter earnings, reporting a non-GAAP earnings surprise with $5.95 per share, but they raised their financial guidance for fiscal 2025, a move that indicates fierce confidence in their strategic positioning. Revenues rose to $2.1 billion, a 14.5% spike from last year, mainly because of higher contractual wins and solid organic growth. Turns out, CACI is as robust as a triple mochaccino on a Monday morning. In a market where defense tech titans like Leidos Holdings and Booz Allen Hamilton were also feeling the jitters, CACI's stellar financial performance stands out. The company amassed a mouth-watering $31.8 billion in backlog orders, reassuring stock market wizards that while change is afoot, there's resilience in the ranks. With the Department of Defense contributing significantly to its revenue pie, CACI is confidently eyeing opportunities amidst this administrative shuffle. If you're thinking that's the end of today's drama, think again. Amid uncertainties, rivals such as DXC Technology, ServiceNow, and GitLab are all sparkling with potential and attracting attention for their performance and stock rankings. But that's a story or three for another day. In conclusion, despite the stock dip, this is not the endgame for CACI. With their financial performance in great shape and an increased fiscal 2025 outlook, CACI's strong guidance could well lift those shares right back up. Keep those eyes peeled to see if its big bets pay off as this Doge saga unfolds. Today, Google made headlines with two exciting developments marking its bold strides in the rapidly evolving world of augmented and virtual reality. Let's dive right in and explore what's cooking over at Google HQ. First up, Google is shaking hands with HTC as part of a $250 million deal. What's the scoop, you ask? Google agreed to acquire a part of HTC's extended reality business, signaling a significant push toward AR/VR innovation. This move is expected to supercharge Google's Android XR platform ambitions for headsets and glasses. With some of HTC's Vive engineering staff now under Google's roof and non-exclusive intellectual property rights thrown into the pot, it's fair to say Google's working hard to amp up its XR game. But that's not all, folks. Remember Google's $1.1 billion HTC smartphone unit acquisition back in 2017? This new venture marks the second high-profile collaboration between these tech giants. Quick recap. Google recently roped in Samsung to develop their augmented reality glasses, right after Samsung brought out Project Muhan, a cool mixed reality headset running on Google's Android XR platform. Google's got its eyes set on a bright AR future, gearing up to tango with Meta and its Orion glasses, along with their other cost-effective Quest headsets. In more Google-centric news, there's something brewing with Samsung. Confirmed by T.M. Rowe, head of Samsung's mobile experience division, this partnership will task both tech phenoms with developing stellar augmented reality glasses. While details and timelines are being kept hush-hush for now, the goal is crystal clear: quality and readiness as soon as possible. Both companies are actively collaborating with third-party developers to ensure there's loads of engaging content waiting for when the gadget finally graces the shelves in 2026. Why does this matter? By teaming up with Samsung, Google is taking direct aim at Meta and Apple, the titans in the AR space. With Meta's plans to unveil the Artemis AR glasses in 2027 and Apple stealthily paving its AR path, the competition is hotter than a chili pepper. Amid this, the duo's collaboration is gearing up to stir the AR pot further. Remember Google's previous fling with Google Glass Enterprise lasting until 2023? Yeah, it fizzled out, and Google's ready for a comeback with lessons learned and bigger ambitions. So viewers, it's clear, Google is not only revisiting the AR realm, but is wholly energized to swing for the fences. Whether it's their fresh liaison with HTC or Samsung, the focus on augmented reality is palpable. But enough from me. I'd love to hear your thoughts on Google's AR maneuvers. Are you nodding along with Google's strategy or throwing up the skeptical flag? Hit me up in the comments section below and let's chat AR. Let's zoom in on Electronic Arts today. With shares tanking more than 17% trading session, it's been a wild ride for investors. And at this point, trying to decide what to do might feel like navigating a minefield. But let's give it a shot. Given the dismal preliminary earnings announcement and the notably off-target projected earnings, EA is currently in a spot tighter than a Mario Kart corner. Couple this with the legal scrutiny Block and Leviton's got brewing over potential securities law violations, and there's enough drama here to rival any gaming console library. These factors tell us that short-term turbulence could make EA's stock appeal less to cautious investors. However, looking on the brighter side, EA has powerhouse franchises and a history of bouncing back with innovative game releases and adaptations. Their upcoming slate, including popular releases like updates to Madden and The Sims, could eventually bolster their revenue stream, provided they can dodge gameplay glitches on their financial journey. For a risk taker, this dip might present a buying opportunity if you believe in EA's long-term potential and fan loyalty. But if we're talking about portfolio security and stability, maybe holding on to Electronic Arts and waiting for more clarity and recovery signals would be more sagacious than panic selling. Remind yourself, this is more like jumping into a complex strategy game rather than a quick twitch shooter, meaning research, patience, and vigilance are key. Keep tabs on future earnings reports, market analyst updates, and particularly how the legal story unfolds, as these could influence investor sentiment further. And always, folks, do your due diligence. Gather intel from multiple sources, weigh the risks, and consult with your financial Sherpas where needed. Whether you're buy curious or thinking of holding your positions, it's always wise to arm yourself with information before pressing the financial X button. Wow, what a roller coaster of a day in the tech world. We saw Electronic Arts grappling with a stock tumble and looming legal issues, while Apple flexed its financial muscle despite some cheeky jabs from the competition. Over in defense tech land, CACI International had quite the stir with political shifts in the air, but still stood strong financially. Meanwhile, Google's making some impressive moves in augmented reality, teaming up with HTC and Samsung in a bold play to take on the AR giants. If you enjoyed this tech news thrill ride, don't forget to hit that like button, subscribe, and share the video with your fellow tech enthusiasts. Stay tuned for tomorrow's updates, packed with even more exciting happenings in the tech universe.